Bum, bum, bum. Welcome back. Yep, that's my own intro music.
There you
Welcome
go.
back. This is another episode of the Brutally Honest Loan Officer Podcast. I am Derek Brown, and with me, as always, Stephen Brock. Say hi,
Hello.
Steve.
I want to say one thing because our last one, we had Holly Meyer Lucas on. You and her both made fun of me for messing up the intro, and I rewatched it like three times, and I said it perfectly correct. Just so you guys know.
It's like you kind of mumbled through brutally on it. Like, I don't know. That's just,
Maybe I can't say
or
brutally.
maybe it's just your face.
It
Like,
could have
it
been.
looked like you're thinking real hard on how to enunciate brutally.
I
I don't know.
was. I probably was. But I was like, you two made fun of me, and the whole episode, I was like, oh, I fucked it up, and then I went and rewatched it, and I'm like, no, I said it correct.
All
All right.
good.
Let's get into it. What are we talking about today?
Ooh, cracking open up a subject that like I feel is super important, but also super boring. Talking about the Fed and their
Ooh,
meeting this week and potentially lowering rates and what that all means. So
who
we're gonna
who
kind of
the who is the Fed? Who the heck is the Fed? Who the hell
just
is the
a
Fed?
bunch
Heck,
of
heck.
old people that meet around and just ruin our days as mortgage lenders. That's I don't know. I think their average age was like 60 something. They're all drawing social security, but still getting paid a lot to make decisions for our economy. So looking it up, it's a group of, I mean, they're attorneys, economists um, that have been voted in to positions where they're supposed to be covering monetary policy and stuff like that, and making decisions that are supposed to be good for all of America. I guess is like the quick explanation of who they are and what
Yeah,
they do.
they're not. I know they're not appointed by a president, right? Like they have overlapping terms or something. Like,
Yeah, but they can't get
yeah,
kicked out for cause.
yeah.
I'm not sure what that would look like or what that means, but yeah. Um,
So the Fed today we're recording. It's 9:16. The Fed
16th of
starts.
September.
Yep. The Fed starts their meeting tomorrow, but it takes them 2 days. I don't know. We're gonna go on. What are they talking about
Like,
for two
does it
days?
really take 2 days for these old fucks to meet and discuss everything? Like, are they not prepared? They didn't bring their notebooks with all the information they need. It's got to take 2 days, so we just drag on. The market's going to be flat while we wait. It's just annoying. They know what they're going to do. It's like they got to meet, to discuss it. I don't know. Not a, I'm just not a fan of like the waiting and all this anticipation and like they know what they're going to do. Just tell us what
it's
you're doing,
not.
so
It's
the
not like,
markets can
hey,
react.
we on Tuesday the market is this, and by the next day in 24 hours, on the next day we're gonna reverse everything we thought about for the last month or so since our last meeting. And the numbers are the numbers. Like that's. But we've been saying that for over a year, and they still haven't done anything. But I will say every anticipation, every economist that's outside the Fed looking in is like they're going to cut rates. How much are they going to cut is really the sticking point. But let's kind of go. Let's see what they talked about. Let's do that. What have they
So,
talked about, quote unquote, recently?
all right. So, doing some research, trying to figure out what the permanent and rotating members have said over the last few months, as far as, and I'm getting into interest rate cuts. That's what I'm like wanting to see because that's what kind of affects our market. Um, so,
I want to bring before we get into when the Fed cuts rates, it's not mortgage rates. It's
right.
bank to bank lending rates, which yeah, that correlates
Fed
goes
funds
down to
rate.
mortgages, but it's also your credit cards, your savings account, your high yield savings and stuff like that. Those get
Short term
cut
lending.
too. Yeah, so all that stuff's gonna get will get cut.
Right. So John C. Williams, president of the Federal Reserve Bank of New York and vice chairman of the Fed. In May, he wanted to see more data. That's it. That's all he said. Just wants to see more data.
We need to see more data.
You've been getting data every month for as long as you've been there. Yeah, I think you got enough data. Okay. Michael Barr, Board of Governors, Vice Chair for Supervision.
Yeah, what is he?
Hasn't announced anything since February where he stated he supports Powell's careful approach to rate cuts. Then we got Philip Jefferson. He's the Board of Governors, Vice Chair of the Federal Reserve. In May, he said it is too early to tell whether the recent slowdown in the disinflationary process will be long lasting. I just think that's, I don't know, like such a
so that basically
statement.
says I've been watching the interest rate. I've been watching inflation come down, but is it long lasting? It's been coming down for over a year.
Right, but and so then he said that April data was encouraging.
Yeah. Okay.
And then another such an awesome quote. Lisa D. Cook, Board of Governors, in June, she said, at some point it will be time to cut rates. Are you shitting me? Like that's like people are wanting, some insight and what are you guys discussing and what are your thoughts on interest rate? At some point it will be time to cut rates.
At some time. Yeah. At some, I can go on this. At some point, it'll be time to. At some point, we're going to raise rates. Well, yeah, that prediction is very bold, right?
Well, at some point, FSU will win a football game. Oh, it may not happen anytime soon.
I think you have a better chance of the Fed raising rates than you have them winning.
Oh, maybe.
Oh,
we got FSU fans going to yell at us. Yeah. Let's see. Michelle Bowman, Board of Governors. She holds a seat for community banking. Rate cuts will be needed for if inflation keeps falling. And then we got Christopher Waller, Board of Governors. He supports September rate cut, noting the importance of weakening jobs picture. He said that last week. Thank you, Christopher Waller, for saying something recently.
What I hate though on the one thing is this job report, or I don't care if you're left, right, whatever, but the job report, everybody's like, oh, look how many jobs we created. I'm like, well, yeah, but how many were second or third jobs? I know we talked about this on the podcast. It's like job creation doesn't always mean the economy is doing well. It could be people having several jobs.
Well, and here's the thing. So the BLS jobs report, let's see, because I pulled this up. Initially, job numbers are based on surveys and estimates from businesses. Surveys and estimates from businesses. No real hard data.
Yeah.
Surveys and estimates. And then over time, they get more accurate information. So that's why you always see unemployment tax records and stuff like that, which then gives them a clear picture of what the numbers should be. And then we get a huge revision. What was it? Yeah. Over 800,000? Are you kidding me? That's almost 1 million. Revised by like 800. Oh my God, 800,000 jobs.
And it's funny is like when they put out the job report, the market reacts. Rates do whatever they do on that part, and then they come back out, and it's like the redaction of what they said, and they revise everything, and it feels like it's like when the newspaper used to come out that it was like on the very last page of the newspaper that nobody sees. It's like, oh, we changed it to minus 800,000 jobs. From what we said. The market does nothing because they're like that's so far down into the news cycle that nothing happens.
Yeah, it's like they don't really care that much anymore, but they cared when it came out. And then because I also I thought that there was some crazy revisions that needed being done because once you look into the jobs report and they talk about new job creations. I think we've talked about this on the podcast, but new job creations, especially out of seasonal times. In January, they look back at December and say, well, there were a bunch of new job created. And it's like Santa's helper was a job creation. Christmas tree stands, job creation. They're not going to be here in January. They'll be gone, but they're like, no, there are plenty of job creations in December. The economy's strong. Yeah. What? Come on.
Everybody bends the data how they want to see it, and it seems the economist or the Fed bends it. I mean, they want their certain number. We want inflation at 2. It always felt like they were moving the goalposts. Like we want the unemployment to this number. We want the inflation to this, and it started happening, and they're like, oh, well, we really meant this. And it's like, no, you didn't. You've been saying for 2 years this is what you want it down to. That's why you raise the rates to slow inflation. Inflation slowed, and now
Right.
it wasn't good enough. But hopefully they finally they're seeing that it's doing what it's supposed to do.
Right. So there were a couple of other board members. Adriana Kugler, she was in June. She was encouraged by recent data. Economy is moving in the right direction. Raphael Bostic last month said he supports rate cuts by the end of the year. Thomas Barkin hasn't mentioned anything lately. He just says he'll be deliberate. That's stupid.
That's a political answer.
Yeah.
I'll
Mary
be
Daly,
delivering by choice.
San Francisco Prez, she's an economist. She said last month that the time is upon us to cut interest rates. Mary, I like you. Loretta Mester, Cleveland Prez, wants to see more inflation data. That's what she said in June. Well, we've seen it, so I would assume that she is for rate cuts. So we're expecting this week for them to announce that they're doing a 25 basis point cut.
Yeah,
And I think
I
that
think
would
it's
be
at
great for
100%
us.
fact that they're going to cut rates. That's what everything is pointing to. Now it's like now it seems lately in the last 4 or 5 days in the last week, I would say then that is it going to be a 25 basis points or a 50 basis point cut?
Well, and I talked to Sherry. This is a couple weeks ago. Sherry's the COO of our company, and I asked her what it would look like if interest, like if they did like 100 basis point cut, because there was like a small group of people that are like, oh, they could do 100 basis points, which seemed absolutely crazy, and it would mess us up big time. Like anybody that we have locked, if they did something like that, it would change the market so drastically that anybody we have locked, we would have to take off the hedge and then relock at new pricing in
Yeah.
order to keep them, because the loans wouldn't be sellable because the difference in rates and stuff like that. So I think that a 25 point cut now this week, followed by their next meeting, a 25 point cut, followed by the last meeting in December, a 25 point cut would be the most beneficial. Slowly coming.
I think so. Yeah, they raise rates so fast that they're definitely not going to lower them as fast as they raised them.
Well,
I
no, because
do.
I think they're looking back like, wow, we messed that up.
Yeah. And you also got to realize is the Fed is they're not they are not actively trying to get ahead of the curve. They're just looking at all the data and then adjusting. A lot of times when they're adjusting, things are already happening. So and the rates currently are already lower because it's anticipation that the Fed is going to cut rates.
Yeah. So if anybody's listening and you're under contract and you locked in your rate a couple weeks ago, your rate is probably going to be close to the same as it would be this week if you're locking in, or come this Thursday once we know what the Fed's doing, because every investor is anticipating that, because they don't want to have somebody either canceling or refinancing immediately. So we've estimated that rate cut. It's been built into pricing and stuff like that from our investors. So don't think that that's the week that all of a sudden interest rates come down. Interest rates, like mortgage interest rates, have already moved lower.
Yeah, they have. I have definitely seen a tick that it's definitely lowered by, and a 0.25 basis or 25 basis point doesn't mean your rate drops a quarter of a point.
Right.
That's what people need to realize too. So, oh, they dropped it a quarter of a point. Doesn't mean all interest rates dropped a quarter of a point. That's not how that works.
Right.
Yeah, I definitely see the Fed lowering it slowly, and basically like what they have been, they're going to lower it. Okay, well, you already read everything that these people said. Now they're going to go back and say, well, I got to see the data. How did that help? So that they might not even lower it. It might be every other meeting because they're going to be like, oh, I got to see the data. I need more data.
Do you think that they just don't get the data until they get to the meeting? Like,
God,
is that the point of the meeting? Let's review this data together. Or is it more like a book club where they need to read the data before showing up? Like, do your homework so that we can knock this out.
I bet you a lot of them don't do their homework. I bet you they have it all. And maybe they have their staff helps them review it. It gives them the bullet points, but it's like,
Yeah.
I don't know. Because so I was going to go over some of the things that they actually do. So they go over, of course, the economy. What is it doing? Inflation, employment. They look all that. Interest rates. Where are they at currently on investments? What does it cost people to do it? employment. We said that financial stability. What is going on with the market? What's the health of the banks? Because they don't need the bank to crash. You know, we saw that. Was it
Yeah.
you know, Silicon Valley, a couple of banks went under. Like that's a huge. The Fed has to step in on that. Outlook and projections. What's going on with the world? What do they see? Global factors going on like that could affect things. The condition of that might actually affect the U.S. economy. So you know, wars in the Middle East, though we might not be in a war, doesn't mean that we're not affected
Right.
by it globally. And then the balance sheet. What does the balance sheet look like? Should the government buy or sell government securities? And those are those mortgage bonds. And that's why rates got so low is the government bought
Well,
them
yeah.
all up.
Yeah. The government was quantitative easing.
Yeah.
That's the technical term for it, but they were buying mortgage-backed securities, and that kept interest rates low for a while. And they should have raised the federal funds rate a little bit sooner. And they didn't. They were, and don't get me wrong, we hadn't had a worldwide pandemic like COVID for them to know exactly how things were going to pan out. But they should have seen the writing on the wall that they needed to increase it a little bit slowly, and yet they didn't. And then everything was reactionary. And I'm not saying that, you know, they have a crystal ball and they should be able to predict the future, but we are talking about like economists, supposed to be some of the smartest people in our country that are on this committee. I would just assume that they know more than we do and can help our government not make poor choices. And yet it just seems to be the same reactionary tale every time. They react instead of being proactive.
Yeah, they're not proactive at all. They definitely do not try to get ahead of the curve. They try to slow down the curve. Is what they do.
But all in all, we have started to see lower interest rates. That's good news. So for some of the things that Stephen and I care about in our jobs, lower interest rates is usually better. That's going to help affordability. Somebody that was pre-approved a couple months ago for a $300,000 house might be able to afford a $350,000 house with lower interest rates. Mortgage payment might be the exact same, but lower interest rates allow for them to, you know, buy a larger house if they want. Not trying to force anybody into a larger house, but buying power is important right now. Lower interest rates. Also, there's some people that have been on the fence. Maybe they own a home. Lower interest rates could open up some inventory. You know, somebody has.
I think that's crucial because okay, if rates start going lower, 1%. If rates drop, easy number 7 to 6. If they drop 1%, it's about 5 million people come back into the market. If that happened, there's still no houses. So the housing supply. So even though the Fed might give the rate cut, might have like a green light, there's other factors to think about. You know, in your situation, everybody's situation is different. Is housing supply, the local market conditions, what's going on, and I always say, when is the perfect time to buy a house? When you're financially ready to buy a house.
Right.
Like that's really what it comes down. No matter what the Fed is doing, when you're financially ready, that is when it is. Now, if hey, I think I'm ready. I've been kind of waiting for rates to go down. Maybe it is. It's time to talk to somebody, to Derick or myself, on what you should be doing and what you should be preparing to go purchase that home. You know, don't make your decisions off of, hey, the Fed might lower rates, might not lower rates, or they did or didn't lower rates. That's not where your decision comes from. That's a 30,000 view of it, though.
Right. So I don't know. I'm excited because it does help affordability.
Yeah.
And that's something that, you know, I've seen some home buyers struggle with. We've been adding, like, I was talking to a buyer the other day, and she was like, I just don't understand how anybody, just a single person, can purchase a home by themselves. And unless they've got great income and very little debt, you know, and they're staying within their budget, not a lot do.
Yeah.
We have a lot more borrowers with co-borrowers, you know, and if you think about it, two people with two separate incomes coming together to pay one bill, the mortgage, one bill. That's why that helps, you know, somebody get pre-approved or purchase, you know, a house when there's more than one income going towards it. But hopefully this week we'll have good news. Some of these Fed members will come out and say good things, but they'll probably just not say anything at all. It'll be all Jerome Powell saying that we're doing a 25 basis point cut and we're going to see where the rest of the year takes us or something. He'll say like that.
Yeah. That's usually it. He's very, very, very vague with it. You got to try to read between the lines. So, well, that's our episode. Who the heck is the Fed? That's what I'm going to name this one.
Who the heck is the Fed? Well, I just named a bunch of the members.
Yeah.
I don't know. We should get good news this week and we should have an idea. I'm hoping that they will come out and explain what they're seeing for the rest of the year too.
Yeah,
that would be
that'll be the key. Like, okay, yeah, they lower the rates. Everybody's expecting it. Like, I think like if you were a betting person, it's 100% that they're going to lower the rates. Now, I will say, if they come out and say we're not lowering the rates, you could see interest rates go back up,
right?
Because they've been expecting them to lower it, and that's what the interest rates are already doing is anticipation of them lowering it. So we'll see how that comes out. But if they do lower it, it's going to be we need to read between the lines of what Jerome Powell says. And basically their outlook for the rest of the year and then going into 2025. What are they looking at doing? And he's not going to say like, well, we're going to lower it 2 more times. There's going to be, you got to basically interpret it.
Right. So we shall see. Might have to do an emergency podcast come Thursday.
Woo.
All right. Well, that wraps it up. Thank you everybody for listening and tuning in. We'll see you next week.
See you guys.